The crackdown from the Communist Party continued this week, and the risks of investing in Chinese companies continues to rise. It's something that I've been reporting about extensively on this program now for years. The U.S. Securities and Exchange Commission Chair Gary Gensler is also warning investors about these risks. He joins me right now on the phone. And Mr. Chair, it's great to see you again. So happy to catch up after all of these years. Thank you so much for talking about this incredible risk for investors. What can you tell us about the risks that you see today?
First, Maria, it's so great to be back with you. I wish it was in person like the last time when we were at the New York Stock Exchange, I think. But in terms of these, yes, in terms of these risks, I think that investors are always allowed in our system to take risks, but what we're trying to do at the Securities and Exchange Commission is ensure that they have the appropriate and full and fair disclosure. That means two things. One, that they're generally not buying directly into a company in China. They're buying a company usually in the Cayman Islands, and that's terrific. But in the Cayman Islands, those companies do not actually own the Chinese company. They usually have some service arrangements. And two, that the Chinese authorities over the last 17 years have not allowed parts of the U.S. government to look at the books and records of these companies through inspecting the auditors. So those are the two issues that we're taking a very close look at. Congress has weighed in on a bipartisan basis.
Well, this is a really important point that you make. These are so-called VIE. You invest in these companies and you think you're investing in a Chinese company, and yet it's a shell for that company is telling you that you actually have no rights and you actually have no vote in terms of what takes place at that company. Isn't that right?
Yes. So what you see is that many years ago, the government said they didn't want foreign ownership in certain sectors, and in particularly the tech and big internet companies. And what we've found recently is that there's a lot of political risk when you're buying something in the Cayman Islands that has service arrangements but not direct ownership overseas. There may be political risk even if it wasn't these so-called variable interest entities. It's a mouthful. But what you should know is that you don't own direct ownership in these companies.
Yeah, and the variable interest entities is a really important point. I'm so glad you mentioned it. The other issue, Mr. Chair, is the fact that we don't even know if these earnings are real, right? I mean, these companies do not have to adhere to the Sarbanes-Oxley accounting standards of the United States. I know that there's an effort to do so, to force them to do so by 2023. Otherwise, they get yanked off of these exchanges. But investors need to understand that they don't follow the same rules as every other public company, even though they trade on these exchanges. Why?
Well, actually, they are subject to the same rules. They just have not allowed the Public Company Accounting Oversight Board to inspect the auditors, they audit the auditors, so to speak. So the SEC, my predecessors, and the PCAOB worked hard on this. And then Congress helped out as well on a bipartisan basis. And if it doesn't happen in the next 3 years, you're right, about 200 or 250 companies wouldn't be able to be listed in the U.S.
So what do you want to say to, for example, a BlackRock who just had a piece out the other day, Gary, and said that they are recommending investors lift allocations to Chinese markets by 3 times. They say China is the growth story. You've got to increase your holding in China companies. I mean, we don't see the risks here with this recommendation that you're putting forth, and yet they're all in on investing in these companies, saying that that's where the growth is.
Well, we're an investor protection agency. We're focused on working families every day. I would just say beware of the risks, that not just the political and regulatory risk, but the risk that you're not really buying directly into China and that they're not allowing your official sector to look at the books and records in the same way.
All right. I want to move on to crypto. You are focused on the cryptocurrency industry. And here Chair, we've got a lot of questions. Online places for people to trade without middlemen, raising some concerns from the Securities and Exchange Commission. I'm talking about DeFi posing risks as it essentially allows users to operate without ever taking custody of their funds. The Securities and Exchange Commission looking into potential fraud in relation to unregistered digital asset offerings. What do we need to understand about digital asset trading platforms, and where is this going in terms of the potential digital dollar?
Well, again, we focus on investor protection. We're neutral about technology, Bitcoin, and the other crypto tokens. I was honored to teach a bunch of this up at MIT before I took this job. And they're innovative technologies, but at the same time, we're not neutral about investor protection. So if somebody in a project is offering a security, they should come in, they should register, and these so-called decentralized finance platforms actually have a lot of centralization. There is a group of entrepreneurs that are running these platforms, and they should come in and, to the extent, work with us and get registered.
Well, I guess what I'm looking for is, the Bank of International Settlements issued a report last week saying that the central bank digital currencies could expedite cross-border transactions while bringing down their cost. We all know that using digital is cost-effective, and yet the regulatory framework is still unknown. Tell me about the regulatory framework as you see it developing for crypto. Well,
I think parts of it are quite clear. If you're offering something to the public and they're looking at it to try to make a profit based on your efforts, that's most likely a security, and the Supreme Court's spoken to that over the decades. Come in, talk to us, get registered. But I would say this field is not going to reach any of its potential if it tries to stay outside of our laws, our anti-money laundering laws, our tax compliance laws, and what we focus on at the SEC, investor protection.
Yeah, I mean, that's good to know, obviously, because there's so many unknowns about the digital dollar. But is it fair to say that a digital dollar is coming?
I'm going to leave that to the Federal Reserve and Treasury and Congress. But I think that these innovations have shown that we all want our payments to be faster and less costly. But we already have digital money, of course. But I'm going to leave those questions, Maria, of course, to the other my colleagues in the official sector.
Mr. Chair, what are your priorities right now? I mean, you come to this job with an incredible resume, understanding the structure of markets better than most, given your past jobs. So tell me what your priorities are today.
I think markets every day are changing. Technology is rapidly changing markets, and we can't take for granted that we have the best markets. I would like, at the end of my tenure, that we've left the markets even better. So the Treasury markets, and trying to reform and make sure that the U.S. Treasury markets are more resilient, competitive, and lowers the cost to the U.S. government to issue. That our equity markets, that we take on some of the issues around dark pools and trading and internalizing that nearly half of our market, rather than going to the lit exchanges and competitiveness there, goes to internalizes and dark pools. I think that there's definitely things we can do to make other parts of the market more transparent, and also update our disclosure regimes for what investors now want to see in disclosures, in addition to what they've seen in the past.
And I know, Chair, the SEC does not enforce the debit interchange rules. That's the Federal Reserve, but you're watching the way companies report and account around it.
Well, that's right. Our disclosure regimes are really a critical piece of the markets, that your viewers, we all get to decide whether to invest, but that the information needs to be fairly reported, and it's decision useful and not misleading. So we're also your cops on the beat, and we're going to work hard to ensure that issuers are reporting accurately.
Yep. Mr. Chair, there's so many issues to talk to you about, the meme stocks, the potential further consolidation for exchanges. We hope you'll come back soon, and next time we can see you. It's great to talk with you this morning, sir. Thank you.